Ashford Reeves. I need to talk to you right now.
Talk to me about what? Who are you?
The CPN loan deals you pushed through your F&I desk for cash kickbacks. $4.8 million across 3.
This is Donovan Ashford Reeves, a top 10 Texas F&I manager who built his entire reputation on closing deals fast. What Toyota Financial Services found buried inside his numbers is about to end all of it.
Walk onto this floor. I want a supervisor.
Step away from the vehicle right now.
Back up right now. I haven't done a damn...
47 loans, $4.8 million in retail installment contracts, 3 years of paperwork, every single deal signed off by the same finance and insurance manager at the same North Houston Toyota dealership. By the time FBI agents walked into his glass office on the morning of January 14th, 2025, they already had his kickback ledger, his Cash App history, and the recorded audio of him taking $2,400 in cash from an undercover agent. Donovan Ashford Reeves had spent 12 years building the reputation of the best closer in Texas. He would spend the next decade answering for the Social Security numbers he used to do it. Before we go any further, I want to ask you something. When you've sat in that little glass office at a car dealership, the one with the leather chairs and the warranty brochures, and the guy in the dress shirt sliding contracts across the desk, did it ever cross your mind that the man on the other side of the desk could be the criminal in the room? Drop a comment and tell me. And if you're new to the channel, hit subscribe. We hold these professionals accountable every single week. The ones with the certifications, the awards, the corner offices, because those are the ones who get away with it the longest. Donovan Cyril Ashford Reeves was born in 1986 in Acres Homes, on the north side of Houston, the second of 3 children born to a Metro bus mechanic and a Memorial Hermann floor nurse. The family lived in a 3-bedroom brick ranch on DeSoto Street, 2 blocks from the Greater Pleasant Hill Baptist parking lot, where his father parked the family's 1994 Buick LeSabre at an angle every Sunday. Money was tight, but never desperate. His mother worked night shifts at the hospital and slept during the day with the bedroom door closed and a box fan running. His father kept the Buick running on a Saturday morning ritual of WD-40 and patience, and Donovan, from the time he was old enough to hold a wrench, was the kid sitting on an overturned bucket in the driveway, handing his father tools and listening to him explain why a car was just a contract between you and 1,000 small parts. He was sharp in school, but not academic. Aldine ISD report cards from his middle school years described him as charismatic, persuasive, easily bored. A 9th grade English teacher at Eisenhower High School wrote on a parent conference summary that Donovan, quote, has the natural gift of getting adults to agree with him, and I worry he will use it before he knows what he wants. He graduated in 2004 with a 3.1 GPA and no real plan. He took a year of business courses at Lone Star College, North Harris, and dropped out 1 semester short of his associate degree because, as he told a cousin years later, the math was for people who didn't already know how to make money. His first job in the car business was at a Nissan dealership on the North Freeway, where he was hired in 2006 as a porter making $9 an hour. He washed inventory, moved keys, ran for sandwiches. Within 4 months, the used car sales manager pulled him onto the floor on a Saturday and let him close his first deal, a 2003 Altima, to a single mother who needed something reliable for her commute to Beaumont. He sold her the car, the extended warranty, the gap coverage, and the tinting package, and walked out of the F&I office with a $400 spiff in his pocket and a feeling he would later describe to friends as religious. By 2009, he had moved to the floor full-time. By 2011, he had made finance manager at a Chevrolet dealership in Spring. By 2014, he was running F&I at a Lexus operation on the west side of town and clearing $140,000 a year, and he was 28 years old. He married in 2012. His wife, an oncology nurse navigator at MD Anderson, was the steadying force in his life. Patient, quietly religious, the daughter of a Liberian immigrant pastor. They bought their first house in the Woodlands in 2015, a 4-bedroom on a cul-de-sac in the Sterling Ridge subdivision with a small pool and a covered patio. Their first daughter was born that same year. 2 more children followed. Another daughter in 2017, a son in 2020. In 2019, he made the move that would define his career and end it. A high-volume Toyota dealership in the North Houston metro area, one of the top 5 volume Toyota stores in the state, recruited him aggressively. They wanted a closer. They wanted someone who could turn the back end of a deal into a profit center. They offered him a base of $90,000, a per-deal commission, and a back-end product penetration bonus structure that, in his peak years, would push his total compensation past $210,000 annually. He signed in March of 2019. Within his first year, his colleagues started referring to him by a single nickname in the break room: Closer. He earned his Association of Finance and Insurance Professionals certification, then his senior certification, 18 months later. He was named to the top 10 Texas F&I managers list in 2021, 2022, and 2023. He spoke on panels at the Texas Automobile Dealers Association conference. He was the guy other dealership general managers tried to recruit at industry events with steakhouse dinners and signing bonuses. By every metric the auto retail industry uses to grade a finance and insurance manager, penetration rates on GAP, on service contracts, on tire and wheel, on prepaid maintenance, Donovan Ashford Reeves was elite. He knew the regulatory framework cold. He could quote the Truth in Lending Act from memory. He had taken 3 separate continuing education courses on identity verification, OFAC screening, and red flags rule compliance. He knew exactly what was supposed to happen when a social security number was entered into a credit application. He knew what the lenders required. He knew what the dealership required. He knew what federal law required. He knew every single safeguard he was about to bypass 47 times. To understand what Donovan Ashford Reeves did, you have to understand the architecture of the room he did it in. The finance and insurance office in a modern car dealership is the single most heavily regulated chair on the showroom floor. It is the place where the deal becomes a contract, where a customer's identity becomes a credit application, and where the dealership becomes a regulated participant in federal consumer credit law. The F&I manager sits at the intersection of the Truth in Lending Act, the Equal Credit Opportunity Act, the Graham-Leach-Bliley Act, the Red Flags Rule, the Fair Credit Reporting Act, OFAC sanction screening, and the IRS Form 8300 cash reporting requirement. The F&I manager is, by design, the fiduciary at the lender's elbow. Here is how a clean deal is supposed to work. A customer agrees on a price. They sit down in the F&I office. They hand the manager a driver's license. The manager pulls the social security number, runs it through a credit bureau aggregator that returns scores from Experian, Equifax, and TransUnion simultaneously, and the dealership management system fires the application out to the lender panel. Toyota Financial Services, the captive lender, gets first look. If TFS declines or counters, the application bounces to the outside panel. At this dealership, that meant approximately 11 lenders, including Capital One Auto Finance, Wells Fargo Dealer Services, several credit unions, and 3 subprime specialty shops for deeper credit tier deals. Within minutes, approvals come back. The F&I manager structures the deal, presents the products, gets signatures, and the contract is funded. The entire process is designed around one foundational assumption, that the social security number on the application belongs to the person sitting in the chair. Every downstream protection in the consumer credit system depends on that being true. The credit score reflects a real person's history. The OFAC screen runs against a real identity. The lender's underwriting model is calibrated against real consumer behavior. If that one input, the SSN, is corrupted, every safeguard downstream of it collapses. The dealership at the center of this case processed between 280 and 340 financed vehicles per month. Donovan Ashford Reeves personally handled the majority of them. He had a dedicated F&I office on the west side of the showroom floor, glass walls, a Toyota-branded laminate desk, 2 flat-screen monitors, a contract printer, and a stack of pre-printed manufacturer compliance brochures that sat untouched on the corner of the desk. The vulnerability he exploited was simple. Nobody at the dealership and nobody at the lender had any meaningful way to verify in real time that the Social Security number on a given application actually belonged to the customer in front of the F&I manager. The credit bureaus would return a file matched to that SSN, but the file was matched to the number, not to the person. If the number had been used to open accounts before, the bureau had a file on it. The lender saw a file. The lender approved or declined based on the file. Nobody was on a video call with the customer. Nobody was fingerprinting them. Nobody was running a biometric match against the driver's license. The system depended, in the final analysis, on the F&I manager certifying that the documents matched the human being. The F&I manager was the verification. For 3 years, Donovan Ashford Reeves was the verification, and he sold that verification for between $1,800 and $3,200 in cash, 47 times. The operation began in October of 2021. It did not begin with him. It began on Instagram. A man operating under the handle Credit Plug TX, later identified as a 31-year-old with 2 prior fraud convictions out of Harris County, was running an account with about 11,000 followers advertising what he called credit privacy number facilitation. The posts were not subtle. Photos of brand new Toyota Tundras, Lexus GX SUVs, Mercedes sedans, with text overlays that read things like "no real credit check" and "drive in 24 hours" and "DM for my guy." The price was $4,500 facilitation fee, paid up front in cash or Cash App. In exchange, the buyer received a 9-digit number presented as their Social Security number, a fabricated employment letter, and an appointment at a specific dealership with a specific finance and insurance manager who would push the application through. There were 3 operators running this scheme into the Houston metro market. Credit Plug TX, a second operator using the Telegram handle Houston Tier 1, and a third who used different handles every 6 months and operated primarily through encrypted messaging. All 3 had, by 2021, identified Donovan Ashford Reeves as a reliable closer. The credit privacy number itself is a fraud product. There is no such thing as a legitimate credit privacy number. The phrase is a marketing term used by identity theft operators to describe a 9-digit number that is being substituted for a real Social Security number on a credit application. Sometimes the number is fabricated outright and happens to pass the formatting checks. More often, the number belongs to a real human being who is not in a position to notice their identity is being used. A child whose Social Security card was issued at birth and who has no credit file. A federal prisoner serving a long sentence with no consumer credit activity. A deceased person whose Social Security number has not been retired from the Bureau databases because the death has not yet propagated. In every case, the use of that number on a credit application is wire fraud and aggravated identity theft, and the F&I manager processing the application is a party to both crimes. The first deal Ashford Reeves processed for the operators was on the 14th of October, 2021. A 2021 Toyota Camry SE, sticker price $27,400. The buyer was a 23-year-old man brought in by Credit Plug TX. The Social Security number on the application, federal investigators would later determine, had been issued in 2017 to a 5-year-old girl in Brownsville. Ashford Reeves pulled the credit. The file came back thin, no history, and Toyota Financial Services declined. The application bounced to a subprime lender on the outside panel and was approved at 16.9% over 72 months. The deal funded. The kickback to Ashford Reeves, paid in cash at a Starbucks parking lot in the Woodlands 2 days later, was $1,900. The second deal came 11 days later. A 2020 Toyota Tacoma. The third came in November. By the end of 2021, he had processed 4. In 2022, he processed 15. In 2023, he processed 18. In the first 11 months of 2024, before the federal investigation reached him, he processed 10 more. The pattern was always the same. The operator would text him the day before. Buyer's name, the vehicle they wanted, the price ceiling. Ashford Reeves would prep the F&I office for the appointment. The buyer would walk in, sit down, hand over a driver's license that the operator had typically obtained through a Texas DPS contact, and that bore the buyer's real photo with a fabricated address. Ashford Reeves would run the SSN. Whatever came back, came back. If TFS declined, he routed to subprime. If the lender's automated system flagged the application for additional verification, he handled the verification himself with a phone call and a confident voice and a fabricated employment letter on the desk in front of him. He was so good at this that the lenders rarely pushed back. He had spent 12 years building credibility with them. He was the F&I manager other F&I managers called for advice. When his deals funded, they funded clean. The kickbacks varied based on the size of the deal and the difficulty of the approval. A clean approval through a subprime lender on a $30,000 Camry was $1,800. A push-through approval on a $60,000 loaded Tundra with a fabricated employment history might be $3,200. The operators paid promptly, sometimes cash app, sometimes a meetup in the Woodlands, in the parking lot of a Starbucks or a Whataburger, or on 3 occasions documented in his notebook, a Buc-ee's off the Grand Parkway. Always cash in a folded white envelope. He kept the cash at home. Most of it went into a small safe in his bedroom closet, behind a row of suits. Some of it he spent. A Rolex Submariner purchased for $11,500 at a private seller in Sugar Land in 2022. A basement renovation in 2023, a $6,000 set of golf clubs, a Cancun trip with his wife for their 10th anniversary that he told her had been won at a dealership sales contest. His wife, the oncology nurse navigator, asked no questions. She knew her husband was successful. She trusted him. The signs were there for anyone willing to look. His declared income on his joint tax returns averaged $147,000 a year. His cash inflow during the same period, the unreported, untaxed cash, totaled approximately $112,000 across the 3+ years of the scheme. The lifestyle gap was real, but it was the kind of gap that hides easily inside a household, earning $200,000 legitimately. Nobody at the dealership wondered. Nobody at his bank wondered. Nobody in his neighborhood wondered. The Rolex looked like a guy who had earned it. The sales managers at the dealership saw the volume of subprime deals funding through his desk and saw it as a feature. He was making the back end work. He was closing the deals other F&I managers couldn't. The general manager, in his 2023 performance review, wrote that Donovan, quote, brings a level of structural creativity to difficult deals that creates measurable revenue impact and is a model for what an elite F&I manager can do when given operational latitude. The review came with a $14,000 bonus. He was the most respected F&I manager in the building, and every single month, somewhere on a server inside Toyota Financial Services Portfolio Analytics Department, his numbers were drifting further away from the regional baseline, and nobody had yet thought to ask why. The catalyst was a dashboard. Toyota Financial Services, like every major captive lender in the auto industry, runs an internal portfolio analytics function whose job is to monitor the credit performance of every loan they originate, broken down by originating dealership. The metric they care about most is the early payment default rate, the percentage of loans that go 90 days delinquent within the first 24 months of origination. A high early payment default rate from a specific dealership is, in lender terms, a red flag the size of a billboard. It can mean the dealership is pushing deals into the wrong credit tier. It can mean the dealership is fabricating income on applications, or it can mean something worse. For approximately 3 years, the North Houston Toyota dealership where Donovan Ashford Reeves worked had been showing an early payment default rate on a specific pattern of thin-file subprime applications that was running approximately 6.2 times the regional average. 6.2 times, not 20% higher, not 50% higher, 620% higher than every other Toyota dealership in the region. For most of those 3 years, the number had been visible to anyone in the TFS analytics team who chose to look at the dealer dashboard. Nobody had looked closely. The dealership was high volume. It generated significant origination revenue for TFS. The early payment defaults, in absolute dollar terms, were absorbed across a portfolio measuring in the billions. The individual losses on individual loans had been written off, line by line, charge-off by charge-off, for 3 years. Multiple lenders on the outside panel had absorbed the same losses on the same pattern of deals without ever calling the dealership, because each lender saw only the slice of loans that funded through them, and no one was aggregating the pattern across the panel. In the spring of 2024, a new senior analyst joined the TFS portfolio analytics team. She was 29 years old, an MBA out of Rice, and her first assignment was a refresh of the dealer risk dashboards. She pulled the 3-year report. She saw the 6.2 times number. She filtered the dealership's pattern of bad loans by originating F&I manager. 43 of the 47 loans in the pattern had funded through the same name, Donovan Ashford Reeves. She escalated to her director on a Tuesday. By that Friday, TFS compliance had opened a formal review. By July, TFS had referred the case in parallel to the Office of the Attorney General of Texas, Consumer Protection Division, and to the FBI Houston Field Office. The FBI opened the case in August of 2024 under the Joint Financial Crimes Squad. The lead case agent was a 15-year veteran who had spent the previous 8 years working dealership fraud cases. He pulled the loan files. He cross-referenced the Social Security numbers on the 47 flagged applications against the Social Security Administration's Death Master file, against the Federal Bureau of Prisons inmate database, and against the Bureau's flagged children database for SSNs issued to minors with no expected credit activity. The matches came back in waves. 11 of the SSNs had been issued to children under the age of 10. 7 belonged to federal prisoners serving sentences of more than 15 years. 9 belonged to deceased individuals, 6 of whom had died before 2017. The remaining 20 SSNs were fabricated outright, formatted to pass the Bureau's basic validation checks, but not assigned to any human being on record. The FBI did not arrest him immediately. They wanted the operators too. They wanted the network. In October of 2024, an undercover agent contacted Credit Plug TX through Instagram, presenting as a prospective buyer with bad credit and $10,000 in cash for a down payment on a Tundra. Credit Plug TX walked him through the script. Pay the $4,500 facilitation fee. Show up at the dealership on a specific Saturday. Ask for Donovan. Have your story ready about your job history. The undercover agent paid the facilitation fee in marked bills tracked by the Bureau. He showed up at the dealership on the 26th of October, 2024. He sat down in Donovan Ashford Reeves's glass office. He handed over a driver's license that the Bureau had constructed with a fabricated address. The Social Security number on his application, provided by Credit Plug TX, had been issued in 2012 to a child in El Paso whose parents had no idea their daughter's identity was being walked through a Toyota dealership 600 miles away. Ashford Reeves pulled the credit. He ran the application. He talked the lender through a fabricated employment verification. The deal funded that afternoon for a 2024 Toyota Tundra with a contract price of $61,800. 2 days later, in the parking lot of a coffee shop on Lake Woodlands Drive, Donovan Ashford Reeves accepted $2,400 in cash from a man he believed was Credit Plug TX's runner. Every second of that meeting was recorded on audio and video. The cash was marked. He had no idea his career had just ended. If you've made it this far, do me one favor. Hit that subscribe button. Stories like this, the white-collar professionals, the certified ones, the award winners who turn the systems they were trusted with into private revenue streams. They don't make the local news the way a street-level crime does. We cover them here every week because the dollar amounts are bigger and the betrayals run deeper. Stick with me. What comes next is how the FBI walked into that dealership and ended 12 years of career in a 4-minute conversation. By the time the FBI was ready to move on the warrants in January 2025, the case file on Donovan Ashford Reeves was 460 pages thick. They had the loan files, all 47, pulled directly from the dealership's records and cross-matched against the lender panel's funding records. They had the Bureau report on every Social Security number, with the underlying identity profiles documenting who the number really belonged to. They had the bank records on Ashford Reeves's personal accounts and his Cash App history, which showed 41 separate cash deposits ranging from $1,800 to $3,200 over the previous 3 years, each deposit timed within 72 hours of a flagged loan funding. They had the Instagram and Telegram correspondence with the 3 operators, recovered through warrants served on the platforms. They had the recorded audio of the October 24th controlled transaction, and they had the smoking gun. The TFS Portfolio Analytics dashboard, with 3 years of monthly snapshots showing the dealership's anomalous default rate, drilled down by originating F&I manager, with Ashford Reeves's name attached to 43 of 47 bad loans in the pattern. The dashboard was not evidence of his crimes directly. It was evidence that his crimes had been visible, in plain sight, on an internal lender system for years. The numbers had been there. Nobody had aggregated them until one analyst sat down with the file in the spring of 2024. The text correspondence with the operators was, in places, almost casual. From Credit Plug TX, on the 3rd of June, 2023, "Got one for you Saturday morning, Camry. Sticker 31. My guy's number is clean. Your usual." Ashford Reeves's reply: "Confirm Saturday at 10. Bring cash. 22 on this one because the file's thin." From Houston Tier 1, on the 11th of February, 2024, "Your last guy almost blew the verification call. Get him scripted next time." Ashford Reeves: "Handled. Lender's solid. Push the next one through next week." There were also the messages he should never have sent. A text to his wife on the 17th of August, 2023. "Work going great. Big bonus coming. Take the kids to look at that house in Carlton Woods." A text to a friend in October 2023. "Bro, the back-end commissions this year are insane. I might clear 250. The contrast between the persona he had built and the cash he was actually generating ran through his communications like a fault line. The FBI also interviewed 3 of his colleagues at the dealership in the run-up to the warrants. None of them had seen the scheme directly. One sales manager said he had wondered, over the years, why Donovan was so willing to take the difficult subprime files that other F&I managers tried to bounce. A junior F&I manager said Donovan had once told him, half-jokingly, that the trick to closing thin-file deals was, quote, never asking too many questions about the file. The general manager, interviewed under a proffer agreement, denied any knowledge of fraudulent activity and produced the dealership's written compliance policies as evidence of institutional good faith. The Bureau would later conclude that the dealership's leadership had been negligent, not complicit. They had built the metrics that rewarded what Donovan was doing, and they had stopped looking at how he was doing it. On the morning of January 14th, 2025, at approximately 9:45 a.m., 2 FBI special agents and a Texas Department of Motor Vehicles investigator entered the showroom of the North Houston Toyota dealership. Donovan Ashford Reeves was at his desk in the Glass F&I office on the west side of the floor, on the phone with a lender's funding department finalizing a deal from the previous evening. The lead agent waited for him to hang up the phone. He knocked once on the glass door, stepped inside, and closed it behind him. The other agents took position at the door and at the corner of the showroom. The general manager, having been notified the previous evening that the warrant was coming, stood at the sales tower watching. The agent introduced himself by name and badge. He told Donovan they had a federal search warrant for his office and his home, and that he was being detained pending arrest. Donovan stood up slowly behind the desk. His hands went flat against the laminate top. He looked at the agent, then at the general manager through the glass, then back at the agent. He asked, quote, "Is this about the volume?" The agent said, "No, sir. This is about the Social Security numbers." There was a pause. The agent later wrote in his report that Ashford Reeves's face changed in a way that was hard to describe. Not shock, not denial, but something closer to acknowledgement. The expression of a man who had been waiting, on some level, for this morning. Donovan said, quote, "I want to talk to my lawyer." The agent said, "That's your right." He read him his Miranda warnings. Donovan listened. He did not speak again. He was walked out of the dealership through the showroom floor in front of 3 sales managers, 2 service writers, a porter, and a customer who was sitting at a different F&I desk waiting to sign his own paperwork on a brand new Highlander. Donovan was not handcuffed at that moment. He was escorted to a federal vehicle in the side lot, photographed, and driven downtown for processing. The search of the F&I office produced approximately 14 banker's boxes of documents. The search of his home in the Woodlands, executed simultaneously by a separate team, produced the $34,000 in cash from the safe in his bedroom closet, the notebook with the kickback amounts and dates handwritten in ballpoint pen, the Rolex Submariner in a watch winder on his dresser, and his personal laptop, which contained the encrypted messenger logs he had not deleted. His wife was home when the agents arrived. She was sitting at the kitchen island in pajama pants and a t-shirt, drinking coffee, waiting for the youngest child's preschool bus. She watched them search her house. When they showed her the contents of the safe, she did not speak. She did not cry. She walked upstairs and shut the bedroom door. The federal indictment came down in the Southern District of Texas on the 29th of January, 2025. The charges were 18 counts of wire fraud in violation of 18 U.S.C. Section 1343, each count tied to a representative loan transaction selected by the prosecution from the 47 flagged deals. 18 counts of aggravated identity theft in violation of 18 U.S.C. Section 1028A, each carrying a mandatory minimum consecutive sentence of 24 months. 4 counts of money laundering, 2 counts of tax evasion, 1 count of conspiracy with the 3 external operators who were indicted separately and whose prior fraud convictions would significantly aggravate their own sentencing exposure. The aggravated identity theft stack was the structural sentencing driver. Section 1028A is the federal statute that prosecutors use to ensure that anyone who steals an actual human being's identity, as opposed to merely committing fraud, faces hard time. Each count carries a mandatory 2-year consecutive sentence on top of whatever sentence is imposed for the underlying fraud. 18 counts, if all imposed consecutively, equals 36 years of mandatory time. In practice, federal prosecutors negotiate down the number of aggravated identity theft counts in exchange for cooperation, and judges occasionally run some of the counts concurrently within the statutory framework. But the floor on these cases is steep. Donovan Ashford Reeves pleaded not guilty at his arraignment. By March of 2025, his defense counsel, a former federal prosecutor out of a downtown Houston firm, had opened plea negotiations with the U.S. Attorney's Office. The cooperation he could offer was substantial. Testimony against the 3 external operators, internal information about the dealership's compliance culture, and details on at least 2 other F&I managers at competing dealerships who he believed were running similar operations. The prosecution offered, in early summer of 2025, a plea agreement structured around 6 counts of wire fraud, 4 counts of aggravated identity theft to be run partially concurrently within the statutory framework, 2 counts of money laundering, and 1 count of tax evasion, with full cooperation against the operators and the broader F&I fraud network. The federal sentencing exposure under the agreement, before adjustments, was estimated at 144 months to 192 months of incarceration, with the aggravated identity theft counts establishing the consecutive floor. He accepted the offer in August of 2025. Sentencing was scheduled for the fall. The presiding judge, a senior district judge with a reputation for taking white-collar sentencing seriously, heard from 3 victim representatives: a fraud investigator from Toyota Financial Services who described the systemic cost to the lender community, a Texas Assistant Attorney General who described the harm to the impersonated individuals, and the mother of the 5-year-old girl from Brownsville whose Social Security number had been used on the very first deal Donovan ever processed for the operators. That mother stood in the courtroom and described what it had taken her family to begin clearing her daughter's credit file, which had been corrupted before the child had even started kindergarten. She said, quote, "My daughter is 7 years old, and she has been turned down for a savings account at a credit union because her name is attached to a repossessed Camry in Houston. She has done nothing. She is in the 2nd grade. The man who did this never met her. He sold her name for $1,900. The judge, before pronouncing sentence, addressed Donovan directly. He said, quote, "You were trusted with the most sensitive identifier the federal government issues to a human being. You were trusted with that identifier by lenders who relied on your certification, by your dealership, by the law itself. You were not a desperate man. You were a top 10 finance and insurance manager in the state of Texas, earning $200,000 a year, with 3 children at home and a wife who believed in you. You did not need to do this. You chose to do this for an additional $35,000 a year in tax-free cash. That is not greed of survival. That is greed of contempt." The sentence imposed was 168 months, 14 years, of federal incarceration, followed by 3 years of supervised release, restitution of $2.9 million to the affected lenders, forfeiture of the cash recovered from the home safe, forfeiture of the Rolex, and a tax assessment exceeding $300,000, including penalties and interest. The Texas Department of Motor Vehicles separately revoked his Texas dealer license permanently. The Association of Finance and Insurance Professionals revoked both of his professional certifications and added his name to the industry's disciplinary registry. He was designated to a low-security federal correctional institution in Texas, with a projected release date in late 2037. His 3 children will be 22, 20, and 17 years old when he walks out. His wife filed for divorce in October of 2025 and listed the house in Sterling Ridge for sale the same week. The Rolex went to a U.S. Marshal Service auction. The cash from the safe was deposited to the Treasury. Toyota Financial Services rebuilt its dealer monitoring analytics function around the lessons of this case. The early payment default dashboard was redesigned to flag any dealership exceeding regional baselines by more than 3 times, with automatic referral to compliance within 30 days. The Ashford-Reeves case became a required module in the 2025 National Automobile Dealers Association annual compliance training, taught to F&I managers across the country as the cautionary tale of a man who turned the most regulated chair on the showroom floor into a private cash register and broke the architecture of consumer auto finance for 47 Social Security numbers and $112,000. The 3 external operators were convicted in 2026 on the parallel conspiracy indictment and received sentences ranging from 9 to 12 years. At the dealership where Donovan Ashford-Reeves had worked, the glass F&I office on the west side of the showroom was repainted, the desk was replaced, and a new F&I manager was hired. The top 10 Texas plaques that had hung on the wall behind the old desk were taken down by facilities staff the week after the arrest and put in a box in the back of a storage closet, where they sit today. This case was about a number, 9 digits, repeated 47 times, sold for an average of $2,400 apiece. But the next case on your screen right now is even darker, and the betrayal hits closer to home. Click it now.